that's about the markets right now, moving in that range of 23,800 to 900. But let's move on and talk about the Indian rupee that has fallen more sharply than other EM currencies today to 85.73 from its overnight close of 85.27. Now, dealers say that the expiry of NDF contracts may be an additional reason for this fall. But Latha is here to explain us all of this in terms of details. Latha?
There are the traditional reasons, or rather the reasons that are common for the last 7-8 weeks that has caused the rupee's fall. The dollar strength, it remains at over 108.15, the dollar index that is. As well, there has been persistent importer buying. There has always been FPI buying of dollars as they sell out of Indian shares. But additionally, in the last week of any month, and more so the quarter, the importers, oil importers in particular, buy dollars to make their payments. That continues. But one big reason why the move could be exaggerated now is the thinness of the market. Practically all foreign bank treasuries are being manned by one person. A lot of FPIs are not on the scene. So, you know, a sell order or a buy order has a larger impact when the number of trades are not too many. The dealer community also believe that the Reserve Bank may have changed its policy so far of having a gentle depreciation to allowing the rupee to find its level. This could have come following the publication of the RBI bulletin, the December bulletin, which highlighted that in November, on an average, the rupee was overvalued by 8.2% or thereabouts, which is very high. Normally, the rupee's overvaluation is about 104 to 100, I mean, with the base as 100. So the overvaluation was more obviously because the Trump election news came and we saw a very sharp appreciation of the dollar. But that could have triggered more speculative attacks on the rupee, and the Reserve Bank could be allowing the rupee to find its level for once rather than give speculators a free run or a better exit point. A fourth reason that people are talking about is the Reserve Bank's positions in the NDF market. This has become a talking point that the Reserve Bank took long rupee, short dollar positions in the NDF offshore market. And those are either 1 month or 3 month contracts. The contracts mature on the last Friday of the month. And it's possible that the Reserve Bank, instead of rolling it over, has transferred some, and it is having an impact on the onshore market. While a 50 paise fall of the rupee in a single day is, something unusual, something we have not seen in the recent past. We have seen it during the taper tantrum. We have seen it during the global financial crisis. So the 50 paise looks exaggerated because lately the Reserve Bank has been holding the rupee very ranged. But I just want to bring up the quarter to date and the year to date fall of the rupee. It's not quite quarter to date. I have taken November 1st to today and Jan 1st to today. And you just look at the comparison. The rupee has actually outperformed even after today's fall. The fall from November 1 is 1.5%. And look at the comparable. You know, we have a lot of imports from China. And if our currency doesn't depreciate as much as theirs, we could be flooded by Chinese goods. So in spite of today's depreciation, we are still much less depreciated compared to the renminbi. And if you looked at the year to date as well, the rupee's depreciation at 2.87, nearly 3% actually, the rupee's depreciated almost 3%, is much less compared to, yen, compared to the Indonesian rupiah, Korean won, the renminbi. All of them have depreciated as much or more than us.
Okay, Latha, thank you so much for giving us those details in terms of rupees and what it actually means for our economy as well. But on that note, we're going to slip into a very short break.